Ladies and gentlemen, got a return guest. It's probably been 2 or 3 times we've had a little chat on my channel. You may know him as Lior Gantz, the founder of Wealth Research Group. It's probably been several months since we've last talked. They were actually, him and some other guys I chat with were down in Miami recently, and I was trying desperately to get down there, but I couldn't make it happen to meet these guys. But nonetheless, we have another Skype going on. Now, his website is wealthresearchgroup.com. And on there, they have a wide array of free downloads. I'm talking world-class kind of stuff. Special reports button. If you click on it, it'll take you to a section where you can just put in your email, like a newsletter thing, and then they'll start sending you some of the free stuff. You'll see once you get some of it, the kind of quality that they have on that website. Now, Lior, you kind of remind me of myself a little bit in this space because, you know, if it's metals, you know, whether it's precious metals or mining companies or whatever the hot thing is or the thing we need to pay attention to, you kind of talk about and delve into. And we kind of had a little chat prior to this recording how we're essentially talking about blockchain technology today. Where's the future of this stuff? Why is it, where did this come from? Why is it out here now? Why should we, be looking at it? And I talk about this stuff all the freaking time. And, some of my subscribers love it. Some of them are like, all right, enough already, But the point is this is something that does not appear to be going away. And it looks like the future is absolutely grasping this stuff and running with it. And I think all of us should too, which is why I discuss it so much on my channel. Pleasure to have you back. And if we could get started on one of the, if we can get started on one of the questions I had, I wrote down a few things here. So speaking of blockchain, why the financial services industry is shaking right now. And as I'm sure you know for sure, with Jamie Dimon coming out bashing it not only once but twice now, Bitcoin, because it's sucking. What I feel is it's sucking, money out of their industry. But this also includes all the major banks. They're not real fond of it right now. So what do you think's going on there?
Well, I think first of all, Jamie Dimon he's a freaking scamster, and the reason I'm telling you this is J.P. Morgan has high-ranking officials and representatives in every blockchain conference in North America, Europe, and Asia. They send their people everywhere. The fact that he's talking this mainstream, and then every conference you meet, you shake hands with J.P. Morgan Chase representatives, just tells you how it's business as usual for these people, Joe. They go and say one thing on mainstream media, and then they act a whole different way, in real life. It's exactly, it reminds me so much of Goldman Sachs telling their customers to short something while they go long, and it's endless. So, why pay attention to these kind of people? The only reason he does this is so that his traders and his agenda can be progressed with a better price. This guy's, he didn't get to be the CEO of J.P. Morgan by being naive, right? This is a high-ranking, elitist businessman, and you have to really pay attention to what he does and not what he says. That's one thing. And the other thing about about what he says, I mean, come on. The ultimate scam has been perpetrated by the commercial banking institutions. Yeah. They have a license to originate mortgages, originate car loans, originate any household loan that they want. They choose the type of collateral, they choose the type of interest rates, and then they originate credit into the fiat monetary system without having to go through any type of other sources to validate this. And they created the subprime mortgage, which is the worst ever scam. This was a fraud.
And do you remember the what they called ninja loans? No income, no job, you're approved. Remember those?
Yeah, no income, no job, no assets. That's ninja, right?
Where's the due diligence? By law in this country, you're a financial institution that lends. You have to make sure the person you're lending to is qualified. Like
Well,
you
I'll
have to
tell you
do
what,
that, and then they didn't
yeah.
do it, and next thing you know, all of our houses are getting destroyed in value, and here we are today, finally with some bit of a recovery, but it's back. It's like 2006 and 7 all over again.
Well, just remember the banks, they make money by lending. So if the conditions aren't right for lending, if people aren't lending, which is what happened in the year 2000. So in the year 2000, in 2001, with the dot-com bubble bursting and 9/11 happening, the central bank slashed interest rates down. And what they believed back then is what they believed in 2009, that slashing them would cause people to borrow, cause institutions, cause corporations to borrow and stimulate the economy. And since it didn't do that, just because of demographics, in the year 2000, demographics in the U.S. peaked. So the baby boomers, the wealthiest generation ever, got to a point where they already bought their houses, they already bought their cars, they already paid for their children's colleges, etc. They were starting to liquidate assets, which they still do 17 years later, and this is creating a problem for the U.S. economy. So they had to create some sort of a stimulus. So they lowered the lending requirements so they can lend money again. This entire system is built on debt. Once you understand that there is no other system here. It's one system, and it's built on debt. And so you've got to deleverage debt and then leverage it up, deleverage it and leverage it up. That's the only way the system works. And the unintended consequence of deleveraging and leveraging is a wealth transfer from the poor to the rich, and more inflation. So this is inherent in the system. The system is rigged against the middle class, rigged against the poor and the poor. It works for the elite, who get the lending much quicker, who get the better rates, who get everything better. So this is the way the world works, and that's why in 2009, this group or person Satoshi was inspired to create cryptocurrency as a payment system, which has been done, many times before. Digital cash existed since the 90s. A blockchain or a decentralized technology for databases existed since the 70s. But just like the Orwell brothers, when they invented the plane, they couldn't convince journalists to come and watch the first flight because they couldn't believe it. It's the same way with blockchain. It takes a while, it takes a lot of time before people feel comfortable with it. In the first few years, they were ridiculed, and no one thought planes would be something that's commercialized and popular. But while we were doing this interview, Joe, 500,000 people are in the air right now, traversing the planet. So
it's normal. It's completely normal now.
It's completely normal now, but look at the first planes, and you'll see that no one wanted to touch them when Ford got the first Model T out. I mean, there were constantly people dying every day from failed brakes, and there wasn't roads, and so people thought a lot of things, and it happens with disruptive technology. First of all, you ridicule it, then you understand it, then you embrace it. And we're about a decade away from mass adoption of blockchain. That's why being a pioneer investor is very, very lucrative. In fact, just to give you an idea, Wealth Research Group last Sunday, so the 17th, we released an alert about a company that started trading Monday, and it went up this week from 74 cents Canadian to a high of 227. Tripling your money, or a 207% return, because it's the purest blockchain company in the world. And you can access my research on it at wealthresearchgroup.com/must, MUSD. Anyways, the idea is that this is just starting, and now this company, for example, has just received financing from one of the co-founders of PayPal. The blockchain is the future, and not any one of the cryptocurrencies. That's just the tip of the iceberg. The blockchain is a decentralized database for everything. It's simply, if you don't like the government, then you should like blockchain. Now, obviously, and I understand your audience because I feel the same way. I would never sell an ounce of physical gold and silver and exchange it for a cryptocurrency. They function different roles. They have different facets and different attributes to them.
Yep.
Gold has been money for thousands of years. Silver has been money and actively used as money to build the world's biggest empires for centuries. And cryptocurrencies have been around for 5 years. It's a very different strategy. But I have speculated in Bitcoin since it was, what was it, like $13?
Oh,
and
boy.
got it. Well, I sold it 119. Don't clap too soon.
All right, I retract it. I retract giving you the credit for that.
Well, I bought it again at 400. I bought it at 800. I constantly go in and out because it's a trade. It's not insurance. It's not gold and silver. We got into Ethereum with Wealth Research Group in February at $12. It's, there's a lot of money to be made here, but it's important to understand that with this company launching, it's the bridge between the public markets that are worth trillions of dollars in investors' funds and the cryptocurrency world, which is only worth 150, 160 billion. So it's a unique opportunity with blockchain. And in my opinion, it is a pioneer industry, just like cannabis right now is a very pioneered industry, and it's worth taking a look at.
Yeah, and I mean, you look at, like you said, 100, what was 150 billion roughly or whatever. But having said that, that's still a lot. That's a lot of money for something like this that just came out of kind of nowhere, and really a lot of that money hasn't been that high until fairly recently. So
Sure.
it's like once we got into 2017, like you said, you got in at $12 or so. I remember Litecoin $2-3. It's now $50-60. And again, like you said, Bitcoin, you were in 100, you were in at 12, 13, whatever. It's all over the place, but it's also, it's been up to, I think, the high of 4,900 or something, but it's 3,000 something today. These are huge numbers. So I look at this stuff and it's like it reminds me of the stock market, but like almost telling us, which none of us can remember, but it'd be like saying, oh, hey, we've got this new thing coming out now. It's called the stock market, where companies can get investment money, and you hold these things called shares or stocks. And as the company grows and does well, you get a percentage through these stocks, and your stocks become more valuable. And it's like, oh, what is this? Like, oh, this is groundbreaking. And look what happened with the stock market. So it's almost like I look at that and say this is kind of what we're seeing with this stuff. However, like you said, when you use the word pioneer, we're still all pioneers today as we're doing this interview. Even though some of us have done very well already, and can say, hey, I already won and I can stop today and I'm good. But this is still ground floor. We're, like you said, in 10 years, we're just gonna be. It's like you mentioned. It reminded me of the phrase I always use, where it's the truth. The truth goes in 3 phases. First, it's ridiculed. Second, it's violently opposed, and then it becomes common knowledge. And
Sure.
you kind of said something similar to that. So this is what we're going to see. I think in several years, it's going to be common knowledge. It's going to be used. And you made another comment when you said, if you don't like the government, and what they do, then you should like blockchain. I'll say, if you do like the government, you should also like blockchain, because they have good reasons to use this and give you peace of mind where, hey, all these transactions, and again, it's on the blockchain, it's an open ledger. Those are good reasons to like it.
Joe, the Department of Defense is already starting to work with blockchain at this point to secure messages. This is, this has been confirmed a few times. The NASDAQ is a huge blockchain investor. They're prototyping. They want to allow the trading to go on 24/7. They don't want 5 days a week. They don't want restricted hours. The Canadian Stock Exchange, the Australian Stock Exchange, the German Stock Exchange. This is something that is opening up wealth in the world. With $5 smartphones just a few months away, the third world will be connected to the blockchain in a few years. And this is a huge amount of people that will be part of global trade soon. The world is you got to separate when you listen to these interviews, and when you are checking out on alternative media, you got to separate between the private wealth and the innovation of people and the problems that governments have. So the private sector is thriving. Innovation is amazing. There's a lot of wealth out there. A lot of companies have hordes of cash, very talented people, and the measuring sticks for wealth, which are fiat currencies, they're faulty. They're problematic. But if the dollar zeroes out tomorrow, if you own Microsoft shares, they don't zero out because the dollar is zero. There's a new measuring stick for them. They have value because of the underlying business. So if I want to buy those shares from you, I will have to pay you for it. Now we have a very we have an amazing system called the stock market, right? Where we can exchange ownership instantly. We can buy, buying a share of Microsoft mean that you own the company. Imagine, doing that in the private world, right? When you want to own a piece of a pizzeria, paperwork and accept. The stock market is an amazing tool, but you got to know how to use it, especially because there's so many algorithms and central banks coming in there, and it's rigged against a person with no financial education. And that's why I launched Wealth Research Group in the first place 2 years ago, because the idea, my passion became, after I liquidated the boutique fund that I ran, to share the information with more people. So many people, they just follow the educational board wherever they live in their country, and they reach the age of 18 and they don't know how to write a check because the financial education is basically zero. It's none. It's none. Just look at the teacher that's teaching you and understand that it's none. The opportunities that exist in the world today are amazing, but the dangers are also grave, and that's what Wealth Research Group is trying to do, is to bridge the opportunities with the dangers and create a financial fortress for our subscribers. But anyways, I divert from the subject, so please.
All right, so, and I want to add one thing. We were talking, you mentioned earlier about, Jamie Dimon's kind of pulling like a Goldman Sachs. It's probably them trying to get a fire sale to load up like they always do. And I'm going to remind everybody, too, like if you really thought Jamie Dimon's serious and he's really upset about this stuff, which, maybe one side of him is because it's sucking some money out of his system, but at the same time, again, these guys they know what the hell's going on. The other side is that they're going to take that.
JP Morgan is part of the Ethereum Alliance. The Ethereum Alliance is Fortune's 500 companies. Right,
and where I was going to go with this is they've got, I think it was Goldman who first announced they were working on some kind of a patent for blockchain technology. Goldman Sachs. Sure. So it's like, okay, come on, what else do we need to see? That means anything you hear them say, like I said last time, give them a high five if you see Jamie Dimon. Hey, thanks for letting me get back in lower, because I'm going to ride that baby back up again. Appreciate that, Jamie. That kind of thing. So one of the things. Go ahead.
Just think in wrapping this up, Joe. If I was looking to buy a big position in a company, and I have 4 days to buy my position, what would I love for the next 4 days to be for that stock? I would love them to be down days so I can accumulate more shares or shares at a lower price. And that's exactly what they're doing. Just it's business. There's nothing to it. It's like a politician. Do you believe a politician when he says something? No.
Exactly.
Okay.
Yep. So you have a couple points here we were chatting about earlier that I kind of jotted down. ICOs, how to approach them.
Well, basically at this point, I pay zero attention to them. They are so dangerous, especially they're dangerous just because there's scams out there, and it's very hard in an anonymous world like like the crypto world to know what you're dealing with, and that's part of the reason that at Wealth Research Group, we stay away from ICOs. I want to see the people behind the companies that I risk my money with. I want to know them. I want to shake their hands. We conduct so much due diligence. ICOs are going against everything that I believe in as a value investor, because judging on a piece of paper, every business in the world looks good.
Yeah.
And therefore, in my opinion, at this point, until they find a better way to present the opportunity. So I bet you there will be webinars before ICOs soon. So a person wants to raise money through tokens, he would do a webinar. He would allow people to ask questions. It will be much more regulated. It must be, because people have lost a lot of money. I know somebody who's lost $500,000 just sending money to a guy who told him he would do blah blah blah, and he just disappeared with about $20 million. So
wow.
it's out there. If you know what you're doing, if you go to a conference and you speak with somebody face to face, and you know the company or you know that startup, that is a different situation. But if you're just dabbling in this, your money's too important to you. Stay away.
Yeah, and that's why I try to tell people, don't just, if you're gonna do these, first of all, which I'm absolutely guilty. I've been in a number of ICOs, and I've actually done very well. So a lot of my subscribers, but at the same time, you could argue and say, well, you guys, you kind of got lucky, because these could have been ones that failed, or we just had a beautiful white paper and everything else. When you look at these things, you go to their website, and it's literally, and I've said this before, it's literally a WordPress template, a really beautiful WordPress template with this certain plugins that they all have, where you can look at the little charts and little things come in on the sides, and it looks great. It looks like a really class act website, but anybody could put one up. You know what I mean? It's just WordPress. It's just a WordPress template.
Sure.
So yeah, we have to do our due diligence. Who are these guys? Do they have a LinkedIn account? What's their background? Have they been programming for 10 years like they said? How can I find this? And some of them, there's very little information. Others, there's a wealth of information, that kind of thing. But
correct.
I mean, I get what you're saying. An ICO, it's just literally, oh, hey, we're this new company. Here's what we plan on doing. And this is going to be great. Oh, okay, let me dump, some money. So what I always tell people, don't just put all your eggs in one basket, because if that basket goes bad, you're going to be really upset. But at least if you had several of these things, one or two end up failing or whatever, hey, these other 3 or 4 I'm in are doing good or okay or whatever, doesn't hurt nearly as bad when you take a beating on one of these things.
Well, for me, the juice is not worth the squeeze at this point. And I for 17 years I've focused on stocks. I know how to evaluate them, and that's where I want to keep my focus. I don't want to divert into something that the learning curve and my competitive edge as an investor is inferior and not superior.
Yeah, and you need to be calling safe things, very safe as you can. And in all honesty, I'm telling everybody this out of my mouth, ICOs is not exactly the safest thing to do, and I've said this. The safest thing, if it comes to cryptos, in my opinion, I don't know if you agree. I guess you can answer that. Is you want to play the crypto game and be safe as you can be. Get into the main coins, Bitcoin, Ethereum, Litecoin, those kind of things. Dash maybe. But the ICO side, that's where the risk, of course, risk reward. But if you get a good one, you stand to make a great reward. But again, it's very risky. Would you agree that if, just generally speaking, the safest thing right now, if someone was to just get in and say, well, I want to do this, but I don't want to be too crazy, just get into some of the main coins?
Well, I agree with you, but I want to also explain why this is true. What gives a cryptocurrency value is the community, the amount of labor and work that the community puts in order to have an infrastructure where value can be transferred. Developers, miners, bloggers, people using the cryptocurrency itself. It goes on and on. The more, think of the related industries, electricity, gas money going back and forth to the facility, etc. The more work and labor there is inside of a system, the more value it has. And just think, if nobody wanted a certain cryptocurrency, it's worthless, right? So the cryptocurrency itself doesn't have value. It doesn't, right? I can create one now. It would have zero value, correct?
That's right, yeah.
What gives it value is the community accepting the utility of it. the anonymity, the privacy, the speed of transaction, the other aspects of it, and that's why Bitcoin has a certain price to it, and other currencies or cryptocurrencies have other prices attached to them. It's a matter of how much infrastructure there is in there, and with the next phase for this, the next phase of safety, is to be involved with a company or with a cryptocurrency run by experts. It's all about experts, and that's exactly why I pointed out in the beginning about about the company Hive Blockchain Technologies, which has emerged on Monday and already tripled by Thursday. And it's because it's a hybrid of Genesis Mining, which is the largest privately held mining company in the world, and Fiora Group, which is a 30-year veteran in the financial markets. So you've got this amazing opportunity with the new wave of blockchain companies, which will be publicly trading. So you'll have complete transparency because they are regulated, because they're monitored, because they have to follow, the traditional rules. And you can't be, it's not like they can evaporate into thin air like, like anonymous ICOs. Anyways.
Yep.
All good.
Cool. So, final thing, some of these opportunities, like you just talked about, this kind of stuff, I'm assuming, is on your website. Some of the downloadable stuff, that kind of thing. People sign up and they get access to this kind of information.
Yeah, of course. Everything about Wealth Research Group has no threshold. That's part of the core values that that me and my partners decided on when we started the company. I want to touch with you, Joe, if you don't mind.
Yeah.
The idea behind what the Fed is doing right now with unwinding their balance sheet. So their balance sheet is $4.5 trillion, and before the 2008 crisis, it was 800 million. So they essentially bought assets, mortgage-backed securities, bonds, etc., stocks, for $3.7 trillion, and they're going to liquidate them. Essentially, they want to liquidate them at about $10 billion a month, escalate to 30, escalate to 50, and get it over within a few years. I want you to wrap your head around how impossible this is.
Yeah, I don't have. Yeah, he's talking to you guys, not me. I've been screaming about this for days now. I can't wrap my head around it. This is insane. Joe, how's it going to happen?
The private savings levels in the U.S. are about $370 billion. The Fed wants to liquidate 10 times that.
Who's going to buy it? Who's going to get this stuff?
Who is going to buy it? And not only who's going to buy it, because I think what they're doing is coordinating with other central banks so they can buy a boatload of these, and and make sure that they're propped up, especially the European bank, which can absorb this type of balance sheet. But it's like moving a hot potato. The underlying idea here is that the Fed has lost control. When you are trying to solve the main problem in the world today, and the main problem, to get this straight, is a debt resolution problem. The world has a debt problem, and it's trying to resolve it. And what they've tried to do is deleverage the system. They've tried to service the loans, to lower the debt burden by lowering interest rates, to inject more liquidity and refinance loans, and to inflate the loans, to inflate the debt. They couldn't do it in 9 years. The only thing that they have left to do is, because they want to inflate this. This is the best way to do it, right? Inflate the debt away. There hasn't been one government in history who hasn't inflated away a large government. Smaller governments, they can default and there will be riots and panic, but it's very localized, right?
Yep.
Big government, an entity like the U.S. cannot do that. They cannot just default on debt. It will cause a world war. So they're trying to inflate away. But if they can't, they're going to try and do what these think tanks have already sent Mark Zuckerberg to do, which is to convince the public that you need to redistribute wealth in America and create this sort of a universal income or guaranteed income.
Yep.
That's the next phase for these people. They want money or currency or whatever you want to call that bullshit thing that they create at their own merit. They want to inject it into your bank account and trigger you to leverage the system up again, so they can continue this show. And the aftermath of this is that inflation has started creeping up right now. The Fed has just released new data, a new way that they judge inflation. It's already 2.74. So it's not that 1.4 that they told you. It's double that.
Yeah.
And what's going on right now in the commodities sector is that because they couldn't create inflation for so many years, because people saved and waited until the economy started to grow. Now the economy is starting to grow because of emerging markets. China, India, Brazil, Russia, they're starting to grow. Europe is growing, and therefore it's pushing the U.S. economy as well. So the global economy is growing just at a point right now where they're trying to inflate. That means that commodities are the cheapest they've been ever. Mm-hmm. And you can look at all of these valuations since World War II, and you'll not find a single industrial metal or a precious metal that has ever been cheaper relative to stocks, debt, and bonds. And so the next phase with these emerging markets growing is that you'll see a period just as you've seen between 2000 and 2008 where commodities become the best performing asset, and that's coming. But before that, there will be a stock market correction, and I think it will be a severe one. The S&P 500, the Dow, and the Nasdaq can correct down 50%.
Yeah,
it can happen real easy, and the reason is that people are sitting on huge profits from the last 9 years. So, and the reason I'm telling you this is because we get so many emails with people who tell us that, hey, when the stock market crashes, will commodity stocks also crash as they did in 2008? And the answer is, I see it, is absolutely not. And the reason is because 2008 was a credit crunch. And so between 2000 and 2008, people have not made a single cent with the S&P 500. Look at the chart between 2000 and 2008. It was in a sideways market. So when 2008 came, people did not sit on gains. They had to liquidate everything that they had, irregardless of fundamentals. And so everything sold off. Right now, they're sitting on huge gains from 9 years of straight going up. And so when they start selling, because the market is becoming too expensive and there are no buyers left, they'll be actually taking gains. So when you have gains, you tell me, what do you do with gains? You roll them over into cheaper opportunities.
Yep.
And the only cheap opportunity out there, in my opinion, that is a massive inflation hedge as well, is the commodity sector. And in my opinion, within the commodities, silver is the most undervalued one. And the reason is it stopped acting as a precious metal and it's acting like an industrial metal. But when inflation returns, it will resume its premium that's attached to it as a precious metal, and it can resume a 40 or a 35 to 1 ratio with gold, sending it above $50 for the first time since 1980. Well, it didn't touch $50, but
yeah,
it can definitely triple easily. And none of these industrial companies that buy silver will raise their voice because they use grams and nanograms in their products. It will not affect the consumer. So it's a very unique situation, and I wrote about it at wealthresearchgroup.com/crash. That is personally, Joe, my blueprint for the upcoming crash, how to prepare, execute, and continue in the aftermath of this crash.
Yep. Yeah, I don't think I would disagree with anything you just said at all. You're going to have all those profits flowing into commodities, like you said, cheap assets, so they could do it all over again. That's the name of the game. Create wealth for yourself, create wealth for your family, and that's what people are going to do. Especially the people who've been doing this for all these years. They know the game. They're going to play the game, and those of us who don't know it are going to be left holding the bag. Hey, I want to retire with my 401k. Oh, it's too late. You're retiring now. Well, the market's being crushed. Sorry about your luck. And that's kind of why I like handling my own stuff. I don't want to put in a 401k that I can't touch. I can't take it out. I want to be in charge of my own damn future. And that's one reason I really like cryptocurrencies, but it's also another reason why I like to have physical metals. And I do like the mining companies as well. But I always, I'm a proponent of physical silver. And as a matter of fact, I'm going to give a little plug to SD Bullion on this note, because they offer any new customers a 10-ounce bar of silver at spot price. And all you pay is a small shipping fee. If you go to sdbullion.com/jsnip4, which is in the description box of all my YouTube videos, that link, you can sign up there and get a 10-ounce bar at spot price. So that's pretty cool. So I'm sure you cover all this stuff on your reports, because I've read quite a few of them. And again, go ahead and as we end this, tell everybody once again, name of your company and your website where they can find out more.
Sure, it's wealthresearchgroup.com, and obviously the main thing is the newsletter, which we release every 2-3 days. Big picture economy, everything that's going on, our top-notch ideas, and we conduct the diligence on specific companies. We actually go on mine tours, and I'm talking about the mining sector, but we also do this for cannabis companies and for blockchain opportunities, and also for long-term dividend companies. If you go on the website and click wealth stocks, you'll see where I park my money long-term. I'm talking the next 2, 3, 4 decades, and preparing myself for retirement. Once we finish these due diligence periods, we release a full-blown report on the company. So it's all part of that umbrella of big picture ideas, education, and then also specific ideas.
Excellent. All right, Lior, it was a pleasure having you back on. I'm sure we'll be chatting again the next 2-3 months, as we usually do.
Hey, Joe, thank you very much for inviting me.
All right, buddy, take care.